Hi guys, this is Terry with Futures.io. It is my honor to welcome FT71 for today's webinar. Your trading mindset, pitfalls and fixes. This is part 2 of a 4-part trading education series. If you have questions, you can type them into the box and we'll do our best to answer them at the end of the event. If you're watching this on YouTube, please do us a favor and give us a thumbs up if you enjoyed the webinar. Also, please feel free to share, comment, and subscribe to our channel. It really helps us a lot. Without further delay, I'll hand it over to FT71.
Okay, thanks, Terry.
There you go.
All right. Okay. So I should be coming across loud and clear, hopefully.
Looks good and sounds good.
Okay. So thanks for joining this session. Again, as Terry said, this is part 2 of the education series, mini-series we're doing here for Futures.io. This one's going to be talking about your trading mindset. This is the second most sought-after topic in a survey I did back in March of about 680 participants. The first one was trading techniques, the next is mindset, and there are a couple others that are planned for the summer. This is a really important one, but just a little caveat I want to share with you here. I traded the Brexit overnight session, which I normally don't do, so I've been at my desk since 12:30 right after midnight this morning, so I may come across as incoherent sometimes. And my goal here is to push through this and try to get you the information as quickly as I can and keep this as short as I can. And you'll benefit from reviewing it. This will be a great webinar, in my opinion, for you to come back to when you're feeling beat up or you feel kind of lost in the whole cycle of what's going on with your trading. First off, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. We're going to explore this guy's mind today. I like this image. It really describes what's going on when we're trading. What we'll cover today: what does mindset mean? The hopeful but helpless trader. I'm sure many of you would associate with that. The dissociative identity disorder. The most common psychological issues in trading. What does the right mindset feel like, so you can get a sense of what that's like on days when you are in alignment. Things you can do to change your mindset, such as accepting mistakes but not repeating them, make everything your own, follow a routine, gratitude, humbleness, and their power, mentoring, and therapy. Those are the topics we'll be discussing. Hopefully you'll find these useful. What does mindset mean? The definition of mindset, very simply, is really a set of attitudes and beliefs with which you approach all situations in your life. So you can have a mindset about dating that could be a complete contradiction to your mindset about marrying. So a mindset's really one word that describes a set of attitudes or beliefs. Generally, these are ingrained within you as a result of the way you're brought up, your values, your perception of yourself, and it's a very, very deep topic, and I'm not a therapist, I'm not a psychologist, I'm not a trained person to talk about this topic other than from the perspective of, for those who don't know, from the perspective of someone who's been trading for 16 years and who has backed and trained backed and trained traders professionally and ran a prop shop, so I had to deal with these issues on a consistent basis. Your mindset can be one for one situation and the opposite for another. The source of this research built behind the mindset when it comes to performance is Carol Dweck of Stanford University. Her book is I want to give her credit for that. This is not my work. A lot of this comes from her stuff. Her book can be found on Amazon. The link right there is case sensitive. If you want to pause the video later and grab it, it's a really good book. It affects how you see things and how you might teach your kids and others around you on how to improve the way they see things for better performance or better outcomes. The types of mindset, there are two. There's a fixed mindset. The fixed mindset is one that believes that you are born talented or you are born untalented. It is a fixed process. Your abilities and lack of abilities are ordained by a higher power, be it God, Yahweh, whatever. They are not something that are under your control. In other words, Michael Jordan was born being able to dribble a basketball and do what he did. And so, LeBron James, same. These are people who are designed and are fulfilling a preordained task to doing. And so are the greatest traders in the world. The greatest traders in the world were created this way. They have a particular mindset. They have a particular set of talents and chemicals and biology that you don't have because you're not genetically associated with them. And this is a fixed mindset. And the way a fixed mindset gets instilled into our way of thinking and being is when it starts out, for example, when our parents tell us that, we do well on a test or we pass an exam, and our parents tell us, you are so smart. See, you are so smart. That is a fixed belief. It sounds like a compliment, but it's actually not a good thing. The proper compliment to someone who has performed well is you have worked hard, and that's the result of your hard work. So instead of issuing labels to yourself and those around you, and that's one of the ways you can detect whether you have a fixed or a growth mindset, is if you're issuing labels to describe yourself, you're using a fixed designation of who you are, and this works against us when it comes to trading. Okay, so a fixed mindset is one that believes that all of your abilities are innate and they cannot be changed, or they are something that's built in. You either have it or you don't. A growth mindset, on the other hand, and this is proven through research, a growth mindset, on the other hand, is one that believes that it's all malleable. It's constantly changing. There's a constant vibration. There's a constant change. The universe is constantly expanding, and so are you. And I'm not talking about the fact that you're eating donuts every morning. I'm talking about the fact that your mind is very, very malleable and capable of getting readjusted, and your beliefs constantly changing if you're in a growth mindset. In other words, you're not setting constraints that are fixed about who you are, your capabilities, and so forth. Your view on things is that this shall pass, I will overcome. And then that puts you in the driver's seat of controlling what the outcomes are in your life. Now, I've been around a lot of people, a lot of traders, and I'm going to tell you that this is a tough subject for a lot of people, and I'm sure many of you are already challenging the ideas behind this. But think of it this way. When we are able to say, I just wasn't designed to do this, it's something that serves us to do that. Okay, it's kind of like saying, and I'm not challenging anyone's religious beliefs, I wouldn't dare do that, especially not in this context. It's like saying that is ordained by God. That is what God wanted. God didn't want me to be this. And so what you're doing is you're taking the responsibility of the outcome and you're handing over that power to some other being, some higher being, or some other being, even another human being. And that's really tricky, because in order for you to progress through the stages of competence, stages 1 through 4 and potentially 5, a quick reminder of the stages of competence. The first stage is you don't know what you don't know, called unconscious incompetence. The second stage is you start to figure out that you don't know what you don't know, which is conscious incompetence. You're still incompetent, you're just aware of it and therefore doing the work to become more competent, usually in terms of studying, visiting Futures.io, having conversations, and so on. Stage 3 is conscious competence. This is what professionals do when they're learning something. You're repeatedly doing something in a deliberate way to gain the skill set to become competent in a conscious way. It's a habit-forming, routine-based environment that you're in. And then stage 4 is where we strive to be, which is unconscious competence. You don't even need to think about it. You sit down and stuff just happens because it's been relegated to your subconscious mind, which is a lot more powerful than your linear mind, the logical mind, because your linear mind processes one thing at a time. So the growth mindset, you're taking that power back and you're saying, no, this is, I can change this, I can do this, and it's really necessary. So if you find yourself, and I'll talk about this later, if you find yourself making excuses or moving the outcome, the reason for the outcome to someone else, you are probably in a fixed mindset. And you know, don't run away from that. It helps answer some of the issues you may be having, or maybe not. Maybe that's where you want to be and that's what you enjoy. But this webinar is about creating better results. This whole series is about creating better results. So growth mindset is one that believes that it's not fixed, it's not innate, it is something that, given the right attention, it is under your control to change. The hopeful but helpless trader. So I run into this a lot through stage 5 as someone who's watching risk all day. I ran into this a lot during my prop shop, especially with new recruits. There's this idea that I'll hope to make it as a trader, but I'm stuck. I'm stuck. And these are, I'll give you some examples of experiences I've had myself in my development, and also have seen regarding a hopeful but helpless psychology, one of which is trader A. The thought is, I don't know, I know that I'm so close, I just know that I'm right there, but I just don't have it in me to hold on to trades the way I plan to. I can feel that I'm right there, but I'm just stubborn / not smart / unlucky / poor / busy / distracted. You throw in whatever adjective you'd like. That is a fixed mindset at work. It's basically saying, I'm right there, I feel it, but because I don't have this or that, or have a certain characteristic or a certain disadvantage, I'm not able to overcome. And that makes you a hopeful, but the helplessness is in giving that power over to whatever you label yourself. I'm stubborn. Well, stubbornness is a choice. And so you need to take that back. You need to start working on the stubbornness part. And we'll talk about that later. Another example. This I run into all the time. I get emails through my website all the time. And there's constantly the need to challenge whatever it is I'm saying or whatever it is that I'm talking. And the common one is trading's for suckers. They've designed this industry to sucker you in, pretend that it can be done. So I'm just a pawn in this big scheme, this big conspiracy, and I'm here to tell you that you can be a trader through these webinars and everything else, my tweets and so on. And they pretend that it can be done, and then they take your money. That's what it's here for. We need more sheep to come in and slaughter so we can eat, the big guys, whoever we are. I'm just not set up the way they are, and that's why they win. Yes, they have the algos, and they have the PhDs, and they have the analysts, and they have the money, and poor you, you're at a disadvantage. But with all of that, I still continue to participate in trading. I cannot stop trading. Why? Because I'm hopeful. And I'm helpless because I don't have the advantages that they or them, whoever they are, have. Okay, and so there's an element of feeding into that. I see people with a lot of followers on Twitter who sit there and say, oh, they're running everybody's stops, they're running everybody's sucker stops. That's not true. That has not been my experience, and I've been in a professional trading environment since day one. Since the day I quit my job as a construction manager, I have only traded in professional trading environments with some really enormous traders and some really awful traders, and nobody sits there and says, yep, they're the stops, we can see them, you can't, we're going to run them. This is assigning your power to someone else, okay? And so the market's following a process of auctioning, and part of the auctioning process is to go through areas of prior highs, prior lows, where stops are generally clustered, and yes, they will run that stop. But that's not the target. You are not the victim of what's going on. Please accept that. Are you really helpless? If you feel like things are happening to you, then you might consider that you're thinking passively and have fixed mindset beliefs. Just like I said, if it's happening to you, then it's really not your fault. And so there's nothing you can do about it, and so you just kind of, you're not responsible for the outcome of what happens. And again, I understand, and I've had this conversation with actual traders that I've hired who have a hard time and who want to make it, but they'll sit there and argue with me about how it is not possible for one reason or another. And this is something I screen for in the recruitment process. I look for fixed mindset beliefs, because these are the things, by the way, and the reason this topic is so important is because changing someone's mindset is the most expensive thing to do when you're backing someone. A huge amount of the resources, my guess is 80% of the resources required, 80% of the funds lost, and the time lost is in changing someone's mindset. So you have to come to terms with the fact that as part of your process of going from someone who's constantly chopping to someone who's constantly losing to someone who is seeing the benefits of your effort, the difference is a personality change. And part of that personality change is recognizing your mindset, taking ownership of it, and moving past it. So, as I say here, this is not real. This idea that things are happening to you is not real, and it doesn't serve you as a trader. The other reason is my trading technique is not working. My edge is not there. It needs to be more refined. I need to work on a better plan. Let me hop on this guy's thread and see what he's doing and see if I can make it work. Oh, I think I found the magic bullet. This guy, he's doing something. I think I've got something better than what I already spent 2 years developing, because that's not working live. It was fantastic in sim. I made millions of dollars trading it in sim, but going live, it doesn't really work. So essentially, it doesn't have an edge. And anyone anyone who's trading has the common sense to know that something's missing in that equation. The challenge associated with having to look at ourselves and the huge hurdle we perceive with changing ourselves causes us to focus on external changes. We spend a lot of time changing our environment. We don't like to change ourselves. It's a common thing we do as humans. You're no different. I'm sure a lot of the listeners here have heard me say before that you're not special to the market. You're not. Most commonly, we attribute our poor trading results to not having an edge or poor technical skills, when actually that's not likely to be the problem. Yes, you do have to have an edge. Yes, your trading plan has to have proper money management, risk control, and a way of executing trades, but ultimately, Most plans fall flat on their face when you go live. As much as you'd like to penalize the results in your back testing, as much as you'd like to penalize your results in sim or demo fills or whatever, as you're testing your plan, somehow it all works simulator, and then you go live and it just goes down the crapper. And the issue in that case is not likely to be the plan. This is where I would come in and say, do not touch the trading plan. Do not touch the trading plan. The only time you'd want to adjust your trading plan is to simplify it. It's really you. You're the problem. And that's where the journey starts between stage 2 and gets you into stage 3, where you start to work on the solutions that I talk about a little bit later. This reasoning has been my observation this reasoning, the fact that we should work on a better technical plan, technical skills, better trading technique, that reasoning hasn't been my observation with neither prop nor online traders. This reasoning is not true for neither group. It's not isolated to online traders. Dissociative Identity Disorder. So a little disclaimer here. No, this is not, I'm not accusing you of having this. It's not a medical diagnosis. I'm not a psychiatrist nor a psychologist, okay? But dissociative identity disorder is also known as multiple personality disorder. We all, in my experience, we all have this within us. We all have multiple personalities that operate at in different environments. How do we know this? I'll give you an example. You have a trading plan for the day. Everything looks perfect, and it's operating towards your plan. You have your hypotheses or whatever it is you plan for the day. And then once the trade is put on, suddenly the market looks awful. It's just the trade looks wrong almost immediately. How many of you can identify with this? Just say yes in your questions panel or your chat panel. How many can identify with this fact? Everything looks great. This looks like the pullback I'm looking for. This is exactly it. My stochastic is oversold. I need to buy this. My delta divergence on the sell side has happened, and I need to get long. This is exactly my plan. It looks awesome. And then you put the trade on, and inevitably, within seconds, it looks wrong. The trade looks wrong. So many things should have been an indication that you shouldn't have entered the trade. You're seeing all kinds of reasons why that trade wouldn't work. You suddenly have so much noise in your mind that the only way to stop it is to exit the trade. You want to get out. You want to scratch out. You want to take your tick. You might take 5 ticks of heat, and as soon as it gets within a tick of your entry, you take a tick loss and you're out. Sadly, once you've exited the trade, what happens? Take a guess. Eventually, it follows its course. It goes the way your plan outlined. You look back and just can't see all of the threats that previously existed. You just look back at the chart and you're like, why did I get out? How did I see all those terrible things? I'm long and I'm seeing huge offers and I'm seeing all kinds of conflict. But then as soon as I get out and it starts working, I give my face a face palm, and I start to think, why did I get out? How stupid. So what happened in that scenario? That's what I'm describing as dissociative identity disorder. It's a double personality or a multiple personality disorder, and it's not really a disorder. It's essentially the fact that there's a system within you that operates when you're under threat. This is what we call a chimp mind. A really good book to read about this is on my website under FuturesTrader71.com/resources. It's called The Chimp Paradox. Read it. Really good book. The dissociation is the result of a perception of threat, and this is the process essentially, and I'm just kind of paraphrasing. The result of a perception of threat. The threat creates an emotional response. The emotional response exists to prepare you for danger. So we we prepare ourselves for this threat, whatever it is. But the threat hasn't happened yet. It's in our mind. The threat is what? That we're going to lose money. So our body in its evolution, and the reason you're able to listen to me and you're not part of the dust on this planet, is the reason you've survived and your ancestors have survived is exactly because of this this response. You're perceiving danger. You have an emotional response. Their emotional response, its job is to prepare you for this danger. It is preparing you for all the different outcomes that could occur. The danger can cause a chemical reaction in your brain. The perceived danger can cause a chemical reaction in your brain. Adrenaline kicks in, all kinds of stuff into your brain and muscles, down your spinal cord. You might get a gut feeling like you're going to throw up. And your field of vision narrows. Your actual field of vision narrows. And narrow field of vision highly impairs your ability to logically assess your environment. Now that sounds like a whole bunch of psychology, and I sound like a college professor. But I tell you what, this stuff happens. This is what's happening. It's hard to see it happen when it is happening. And this is probably one of the most important things you can take away from this webinar. And that is, you are not who you are when there is danger. So you are not the person that has planned the trade. The person executing the trade is not the same as the person who's planned the trade. Now, does that permit you to say, oh, you know, I got out of that trade because my monkey's crazy. I've got a crazy chimp in my mind, and that's why I get out. No, that's a fixed mindset. You are the same. That monkey you talk about as if it's another person is you, and you have control over how to react to it, and we'll go over what you can do to help respond to that. The most common psych issues in trading, here's a short list. There are a ton of them, but I'm just telling you, and I'm sharing with you the ones that are obvious, that I've seen during my tenure as a prop guy and as a working at a brokerage. You're expending all energy, not expending, it's actually expending all energy on technique and none on psychology and emotional awareness. So the number of people who are out there looking for the next charting package, the next indicator, the next back test, learning Python, learning R, gathering market data, looking at what products to trade, talking to other traders about their approach, the amount of energy being spent on that is absolutely enormous compared to the amount of energy that you're spending on figuring out how you respond to threatening situations. Okay, and your attention should go to the psychology. Once you have something that you feel comfortable with and it makes sense, and even if you penalize your exits on a simulator, you see an edge, you see a positive expectancy, that work is done. You need to just stop putting 100% of your focus on it. You still need to follow the market. You still need to refine your technique, but the psychology side of this is so important. I'm telling you this from experience. Trust me. I'm not just regurgitating what others have said. This is the truth. My time as I'm teaching someone to trade at my prop shop, as I sit them next to me, my time is spent mostly helping them manage their response, their reactions, okay? So this is where your attention needs to go. The best way I've found to figure out what your emotional responses are is to talk to someone who knows you. Talk to whoever you're closest to, your mom, your dad, your wife, your significant other, your partner, whoever has constant contact with you and sees you in different situations. Ask them how do they respond when they are angry? Are they the type of person that withdraws? Are you the type of person that withdraws? Are you the type of person that projects? the problem onto others? Are you quick to blame yourself and take all of the burden of whatever the issue is, as opposed to being self-aware and logical about it? How do you respond? You'll find that your response in trading is practically the same. There's always the fear of missing out as a common issue. Confirmation bias, you want to see what you want to see. And if you see yourself as someone who's always getting taken out at the high or the low tick, then guess what? The one time it happens in 50 trades, you'll remember that one time as if it happened 25, 30, 60 times. But actually it only happens 1 out of 50 trades, and that is well within the realm of randomness when it comes to trading. The fact that you got taken out at the high or the low tick and the market just ripped the other way and filled your targets after taking you out. Confirmation bias, we constantly want to see what we want to see. For example, another example of confirmation bias is when people like an idea and they want to make it work, and so they spend a lot of time proving the effectiveness of the idea versus being unbiased in that they prove the effectiveness of the idea but also prove where it's weak. Every single plan has its kryptonite weakness, right? Every single method. If you're a breakout trader, then balancing markets are going to get you. If you're a balancing mean reversion trader, then breakout markets are tough for you. If you are someone who trades well in volatility, then choppy markets, low volume choppy markets are going to, there's always, recognize what that is. With confirmation bias, all you look for is why this particular plan doesn't work or why this particular plan works, depending on what your psychological need is. Skewed expectations, this is a big one, and that's why I put an exclamation point on it. I'll tell you something about skewed expectations. If you constantly act according to what you expect will happen to you, then you will have a very difficult time following your plan. I'll repeat that. If you constantly act while you trade based on what you expect to happen to you, then you will have a very difficult time following your plan. It's almost physically impossible for you to let the trade take its course if you expect to get stopped out every time you get in. It's kind of like people who date. If you're looking to date someone and you think that all men are scumbags, okay, your expectation is that this next date's not going to be any different. This guy's going to be a scumbag. And because you expect him to be a scumbag, you are not going to be yourself. You're going to be someone who's not very pleasant to be around because you expect the guy to be a scumbag. Because you're not pleasant to be around, the guy becomes rude or becomes defensive and turns into a scumbag, and therefore you're right. All guys are scumbags. You see, if your expectation is that this coming trade is going to fail, or here you are, you're going to be in pain again because you're going to get stopped out and you're going to hit your loss limit for the day, and that's the expectation you have coming into the trade, then that is what your entire focus will be when you enter the trade. The fact is, and you've probably heard me say this on every single webinar that I've ever done, the outcome of this very next trade is unknowable. It is 50-50, period. Your expectation is that it should be 50-50, period. So don't sit there and tell yourself, I plan for my stop, I plan to get stopped out. If it works, great. Good. If that works for you, but you're still able to keep your hand away from the mouse or the keyboard, fine. You're absorbing the loss ahead of time. That helps you. If that helps you with your emotions, that's great. But if you're reacting to that, it's very, very difficult to follow your plan, and you're relegated to either, chopping up your account till it diminishes to nothing, and then you have to go to work and replenish it, or you have to fall back on simulator because trading live is too emotionally taxing for you to continue to do. Okay? The next thing is emotional fatigue. And by this, and I would really encourage you to just listen to this once again. Okay? I'm really trying to help you here. Emotional fatigue. What is emotional fatigue? Your emotional ability is like a muscle. If you're emotionally taxed, in other words, you're in an unstable relationship, you just had a newborn baby, if you did, congratulations, and you're not sleeping well, there are issues with your parents' health, somebody has just died, you just got divorced, whatever. Those things are debiting your emotional capital. They're withdrawals from your emotional capital. And just like a muscle that's been fatigued by lifting, when you come to trading, you're demanding more work on that emotional capital. You're demanding it to be refined for your trading because it is an emotional process, okay? If you're already taxed elsewhere, your outcome when you come to trading is going to be very, very emotionally charged, and therefore it'll be very hard for you to just exercise that Zen moment, the thing I'm going to talk about here in the moment, of having the right mindset, because you're just emotionally fatigued. And even if you're in a growth mindset and you're at stage 4 of competence and you've got it going on, and even I get emotionally fatigued and I start to do stupid things. And I've had many, many episodes of that, very, very expensive episodes. So you just have to recognize that these are common issues with your psychology. Accomplishment versus wanting, the dissonance that occurs between accomplishments that you've had versus what you want. You are constantly rating yourself versus what you expect, and it's just never good enough. You should have caught that huge move that happened on the close today on the upside. You should have caught that move. You had a 1 lot, you took 7 ticks out of the ES, you should have had a 10 lot, you could have put on a 10 lot, and you should have run that and pulled 6 points out of it and had a great day today. That's what you should have done. And what you're doing there is you're not being present, and what that does is it starts to influence how you see the next trade. And finally here, outcome-based versus process-based performance tracking. So you're constantly rating your abilities as a trader based on what your P&L said. What is the outcome of this trade? Oh, it's a winner. I feel like a superstar. I'm awesome. Had a big day. I've cracked it. I'm awesome. It's incredible. I just couldn't do anything wrong today. I'm awesome. My response to that is watch your risk tomorrow. You're going to get whacked. That's been my experience. Okay. Instead, focus on an outcome-based performance review. Look for, here's what I said I'll do, here's what I did, and it's exactly alike, and here's what the market yielded for my edge, period. To get into stage 3, where you're consciously competent and you're seeing results over time, you have to get into the state of mind of rating your performance based on exercising your edge, your plan, period. That's the only thing you're rated on. Your edge, if it's exercised properly, will show up over time if it exists. And you know it exists by researching it, testing it, sim trading it, and so on and so forth. That's how we know we have an edge. Most people have an edge of some sort on most days. They're just not able to act on it. What does the right mindset feel like? Here are the key experiences from my experience under the right trading mindset. Here's what it feels like. Your trading becomes fact-based. It's not, oh, I said it would go up and it went down. Oh, damn it. It's very fact-based. It is not emotional. There's no emotional charge to whatever the outcome is. You know the market is like the weather. It does what it does. It's like the ocean. It does what it does. The waves will come and go and come and go, and it has nothing to do with how hard you're flapping your arms to fight it. You just recognize and submit to the fact that you are a tiny little part of you're a tiny drop in a very, very vast ocean. So there's no sense in having a charge. You understand that it's either going to work today or it's not, and then I come in tomorrow and it's either going to work or it's not. My job is to consistently produce and to consistently follow whatever it is that I'm planning on a daily basis, period. That's your job. So you create your hypothesis or plan for the day. You look for what the market is giving you for that day. You exercise your edge. You execute it. And then stop or target. It's really not up to you anymore. Being in the right mindset tells you that this is the control I have. The control I have is in executing the plan, and that's it. And that is under my control. I am the king and the controller of that domain. I'm not the controller of what the outcome is of this particular trade. Don't try to be. Don't try to avoid the loss, because you just got smart after putting the trade on, just like the chimp did in the earlier example that many of you identified with. There's an ability to visualize what will happen. You can see, I don't know how to describe it, I'll do the best I can, but you can see what's likely to happen before it does. This is when things start moving from your left brain to your right brain. This is when things go from the conscious competence to the unconscious or subconscious competence. You can see it coming before it does, but you still have to execute according to your plan. You can't just make stuff up. There's a calmness to the process. It's a boring process. You come in, you do your thing, you follow your routine, you close your eyes before the market opens for a few minutes, you find calm, you find focus, the market opens, you're reading what the market-generated information is. It's doing this, it tried this, it rotated here, the biggest rotation is higher, it looks like buyers are in control, here's a pullback to an area of interest, I'm executing. It's calm. It's calm. The market doesn't have to validate you or your plan or your ability to be a man or a provider or a woman or whatever. It doesn't have to do that. The market is the wrong venue for this. The market is just there. It exists to match buyers with sellers, period. Just like the ocean exists under its own laws. You cannot interfere with those, so calmly interact with it. There's a detachment that's tied to the calmness. You have done what you needed to do. You did what you needed to do today. It is not up to you to control the outcome. You don't control the outcome. Things you can do to change your mindset. We're almost there, folks. I know this is a lot of information. To change it, recognize that it all starts and ends with you. This is the growth mindset. I control my destiny. I control my destiny. I do not control the outcome. I control my destiny. I decide when I interact with the market and when it stops. This is the biggest difference between gambling and trading. Gambling, every game stops. You know, you place a bet on a football game, a soccer game, you place a bet on roulette, you pull the lever on a slot machine. It stops. There's a point where the outcome has to happen. In trading, it does not. The market will continue to move against you until you act to take yourself out, or somebody else acts to take you out because they're liquidating your account. So it all starts and stops with you. So sitting there, putting a bad trade on, or putting a trade on that doesn't work in your favor, and then just saying, forget it. I don't care. Take it all. Take my entire account. You're giving away the only power you have, and that is to just follow your plan. You remove your stops or you expand your stop because you want to give it more room, because somehow you became so much more intelligent once the trade has been put on, and once your field of vision has narrowed, and once your mind is focused on the danger and identifying the danger. Somehow that is a better environment for you to trade than the environment that the plan was created under. No, that's not the case. Just follow the plan. Recognize that with deliberate practice, you're constantly recreating yourself. Constantly. Your job is to identify your weaknesses and to start to hit them, to start to practice, to improve them. So the whole thing about outliers and 10,000 hours and so on, it's all nonsense. You know, there's a new book, there's a book from the guy who did the research that Malcolm Gladwell built that hypothesis on, and he basically refutes that idea that 10,000 hours is all it took for Bill Gates to become what he is. No, it's 10,000 hours is, on a small sample of cases, 10,000 hours of deliberate practice is what created those results for that sample. So 10,000 hours of staring at doing nothing, 10,000 hours of simulating with 100 lots is zero effort, which means zero's gained. You're wasting your time, time which you'll never recover. It's the only thing you cannot recover. Get rid of fixed words like should, must. The market should test here. The markets must sell off because this is ridiculous. The stuff the Fed is doing is ridiculous. The market needs to go higher. The market has to do, has to drop now because it can't go any higher. The market always trends after 12 o'clock, and the market will do XYZ. Get rid of that stuff. These are all fixed mindset words. You are putting a fixed, you're putting a fixed thing onto the market. What you have to do is say it is likely to do this, or there's a probability to do this. It may do this, and then see what it does. Every trade you place, whether you know it, like it or not, is a statistical probability. That's all. You're betting on a statistical probability because the outcome is unknowable. Be present in the now. Be present in the moment. Don't sit here and think about, oh, with that last $300 profit, let me see, the $300 profit on a trade times 2 trades a day is $600 a day, 252 days a year, $600 times 252, I'm a millionaire. Be present. Stick with the market. Be present with what you're doing. And meditation is a huge, huge helper in this realm here, being present. Keep your technique as simple as you can. I know that's not always easy, but keep your technique as simple as you can. So your trading plan, try to keep it as simple as you can. See the webinar that I did a few weeks ago, part 1, called Trading Techniques. Keep your plan to 5 or 6 things. The next thing you need to do is set limits, set risk limits and targets for yourself. Set time of day limits if you need to, and stick to them. Never, ever, ever violate your limits. If you violate your limits, you're basically tampering with your ability to trust yourself in doing what you need to do. Every time you move that stop, every time you change your mind, every time you change your plan, you're creating this distrust that you have. You and your chimp are learning to distrust each other more and more and more. And so you're not able to know for a fact that you will do what you're supposed to do. I can tell you, I will do what I said I will do as a trader. It's not always been that way. But when I say, if it gets up here, it is likely to be wrong, I'm out. Even if it looks good still, I'm out. I would rather take the loss and jump back in, reset, expand my field of vision, and reset and come back into the market than to sit there and say, here's my plan, and to constantly violate it. Because you can take that plan and put it in the shredder and just gamble. It's the same process. Owning it is the main path. Own it. Own the whole thing. Accepting your mistakes as normal course of learning, but not repeating them. So journal your errors. This is a big thing. I know people don't like to journal anything. But journal your errors. Keep track of your errors. What do those errors cost you? Whatever errors you're making. Oh man, look, I waited too long. I wanted to get in at 20.92 and a quarter, and I waited to 20.94. That's an error. What does that cost me? Make everything your own. Never jump on someone else's plan. You have to own whatever it is you're doing. And also, I've talked about this, the power of habit. Follow a routine. The more quickly you can get yourself into a routine that repeats itself, for those of you who are familiar with the Trader Bite I do every morning at 9 Eastern on YouTube, you can find it on youtube.com/FuturesTrader71. That Trader Bite follows the same routine. I'm sure many of you can probably say the words before I do on a daily basis. I'm following the same habit day in, day out. This is a really important part. Gratitude, humbleness, and their power. So on this, I just want to spend a couple of minutes. We're almost done here. With regards to gratitude, humbleness, and how powerful these two things are, generally people describe how people are generally self-absorbed. People put themselves in the middle of their universe, and that's just part of who we are, okay? Try to put yourself in a situation outside of where you are, and the best way to do that is to be involved with some sort of a charitable cause. I encourage every trader to go out and just, you know, call your local Habitat for Humanity. Just, if you've never volunteered, start. It really changes this. It changes the way you see yourself. The next slide will give you an idea of what that is. If you can put yourself in other people's shoes or put yourself in other people's circumstances, you start to recognize how lucky you are and how fortunate, how much more you have than others. My charity volunteers at soup kitchens a lot. We pack food for the elderly a lot. And you know, when you're delivering food to someone who's 84, has no kids, is living by themselves in a smelly apartment, and their entire week is built on somebody coming and giving them a paper bag with some, you know, oatmeal and rice and a can of tomatoes and some bread, you start to recognize, man, I am incredibly lucky. And when you start to experience gratitude and humbleness, the universe starts aligning itself with you. You start to see things for what they are. You start to become present in the now moment, and believe me, things start to happen that you didn't expect, including possibly leaving trading as a way of recognizing or realizing your ability or whatever it is that brings you happiness. I know it's philosophical, I know I'm being philosophical, but it's really important to give, especially when it becomes really hard. When things are really harsh, the best thing you can do is find someone less fortunate and give openly. Give secretly, give silently. It helps you stay humble, and it helps you see the greater part of you. It helps you see how great you are as a human being. When we give selfishly. When I started my charity in 2008, I did it for myself. No, I didn't think I was going to be a superhero, and I don't want recognition for it. I did it because it served me. It gave me something. It connected me with like-minded people. It helped me see that I'm worth something, that I'm doing something useful with the outcome of my fortune as a trader, right? This is really important. And I did it during a very, very difficult separation and divorce and so on, and it kept me grounded, and it kept me humble, and it made me a better dad for my children. I'm sharing a lot here personally, but I encourage you to just go and volunteer at your church if you're Christian, or synagogue if you're Jewish, or your mosque if you're Muslim. If you're neither, if you're agnostic, then find, you know, a Habitat for Humanity, find something. There's always something, somebody who's not looking just for your money, they're looking for your presence, they're looking for your help, your labor. We go down to the food depository and pack boxes for emergency relief that were sent to Katrina's victims and so on. Do something. Okay, this is an important part of your psychology and your habits as a trader. This is not something you're doing as a community service for me or anyone else. You're doing it for yourself. And in light of that, you are here. Look at this dot. This little dot. See that dot? That dot, it's not even Earth. That dot is just all the stars that we can see. And within that, there's an even smaller star, and it's the sun. And even smaller than that is the Earth going around it. And even smaller than that is you. That's how small you are. You are so small compared to the big cloud of dust around you. So how big are your problems really? Why are you fighting the market? Why are you fighting yourself? It's really important to recognize that you have a place in the universe and it isn't all that big. So your problems aren't all that big. Just be thankful that you're still able to trade, so that you're wealthy enough, even if it's a $2,000 account or a $1,000 account and you're trading FX or micros or something. That's $1,000 more than other people have, okay? After all, we're all traders here. Mentoring and therapy, this is the last thing. I'm going to keep this very brief because this is getting long. There's a caveat to finding mentors. I've scoped this out. I've looked at this very closely. People have asked me to mentor them. People have asked me to refer them to a mentor. I have looked at several people, and I have to tell you, be careful. Mentoring is a tricky thing because a lot of the people that I see offering mentoring services have never traded in a professional capacity in a professional environment. And you can be a very profitable trader and a successful trader from your house. You don't have to be in a professional environment. But there are things about being in a trading environment that help you become a good teacher, that help you see the variety of people. If we're doing this on Skype all day long, I'm not able to recognize a huge portion, 90%, let's say, of what's going on with you because I can't see what's happening while you trade. So mentoring is a tricky thing. I'm not trying to poo-poo anyone's business or anyone's ambition about being an online mentor or whatever. I'm just telling those who are looking at mentors, just be careful. You have to see that this person has experienced what they're trying to teach you, that they have a stake in the outcome of how you do. Potentially, I know I'm throwing myself to the wolves here. Potentially, make the results of your overall plan as part of a portion of their payment or something. Make them have a stake. This is what I did as prop, is I had a stake in what the outcome was. It was my money they're trading, it was my money they're losing, and when they made money, it was my money that I gained back, and then I changed someone's life. So mentoring is a tricky thing. People go to mentors and psychologists and so forth and treat them like mentors. It's good to be in a strong group of people who hold you accountable, who keep you focused, who are as committed as you are, and hopefully you can find a mentor that does that. But just it's a lot of money usually, and it's better focused developing who you are. And that brings us to therapy, the final topic here. Use a therapist. If your insurance plan will cover mental health, find a performance therapist. Once you've identified your triggers, your charges, use therapy. It's so important. Your mental health is really, really important in trading. Find a therapist that understands, especially someone who is a performance-based therapist, someone who has worked with injured athletes, people recovering in physical therapy, things like that, and start to work, because what you need to do is start to understand what causes these reactions. And I'm not talking about sitting there and figuring out why you act the way you are because your dad didn't love you or mom didn't love you or whatever. That may be the cause, it may not be, but work with a professional. Most insurance plans cover this, so use it for your trading. It's important for your overall health, your overall mental health and well-being and self respect and so forth. Go to therapy. It's really not a big deal. It's not a bad thing to do. Okay? Finally, if you have questions, FuturesTrader71.com/contact or info@FuturesTrader71.com. That's all I had for you, and that's a lot. And I think I used up the whole hour here. Terry, you still with us?
Yep.
All right. I hope there aren't that many questions.
Actually, it looks like there's only a couple. Let's see. There's a question asking, is any of this originally from EST, Landmark Forum, LifeSpring, or even Science of Mind?
I'm not aware of any of those except for Landmark Forum, which is actually down the street here. I have a friend who is a teacher on the Landmark Forum, and he's been pushing me to take their course. I did not learn this from any course that I took. I honestly, this is really purely just me dealing with my nonsense, you know, building myself as a trader originally, and then having to go through this more than a couple of dozen times with other traders. And I kept very, very good, like to build my training manual, I had to keep very good track of what we were working on, what the issues were, and what solutions I was devising. So I did read a lot of, I read the Steenbarger books, and I read I like non-trading books. I prefer non-trading books, but I read a lot of books about psychology, especially coaching, performance psychology, that sort of stuff. Dan Millman, for example, I have on my website. If you go to FuturesTrader71.com/resources, you'll see books on performance. Those have been very helpful, but I didn't pick these up from some sort of, I'm not regurgitating some course here.
Okay. Let's see. How do you deal with freezing or not being able to pull the trigger when an edge appears and needs to be executed on?
So the way you deal with that is before the fact, unfortunately. It's this question is similar to saying, how do I deal with a fire that breaks out in my kitchen? If the fire's already broken out and you don't have some sort of an exit plan and a fire extinguisher, really hard to help you in that moment. The planning happens before. You need to understand that and this is really hard for people, I say this lightly, but you need to understand that you cannot control the outcome of trades. You cannot control that loss and where it appears. You cannot. The only thing you can control is how your edge shows up in the market, meaning if losses show up, what does that do to your overall performance? And if losses show up, do you still have a positive outcome probability in the long run? That's what's important. That's what you need to focus on. So knowing that you cannot control how the trade works out, like you cannot, trust me, you cannot control how the trade works out. I know you might take a stop early and save yourself, a few ticks every once in a while because it doesn't feel right, and then you'll remember that as the best way to trade or whatever. But the fact is, if you follow your plan and it has an edge, you have to just follow what it tells you and let the edge play out. Knowing that, there's no longer any reason to not take the trade. And we see this, I talk about this in webinar 3 of the webinar series on my website. Most people who are in stage 2 or who are struggling will only put a trade on once they've convinced themselves that that trade will work. If you've convinced yourself that the trade will work, what incentive do you have to decide on a stop? What incentive do you have to work on your overall plan and how you're going to manage it? You're just basically trying to nitpick and pick out of a random sample of data which trades will have a positive outcome when in reality you cannot control that. So how do you deal with freezing up? You deal with freezing up by practicing your edge more and more and more. Just make sure before you go live, make sure that you have an edge. Just make sure that over time your overall outcome is positive. Okay, and if you have that, then practice it in a sim environment. Because you don't get real fills in a sim environment, especially on platforms like TradeStation and so on, what you need to do is then penalize your limit orders. So if you think you're going to get in and you're going to exit 8 ticks out before past your entry, and you put an offer out there to exit, add another tick so that it'll trade through. You're penalizing your exits by a tick, and so that you know that the trades have to trade through the price for them to fill you. If you see that happening over and over and over, and you're tracking your percent win, percent loss, the average win, average loss, you have an expectancy, and if that expectancy is positive, then this is a trade, this is a plan that has an edge. Your job now is to apply it the same way. The second part of this is you have to understand yourself. You have to understand that you're going to want to fight it because it's built into your, there's a hardware in your brain that's going to want to protect you from the loss. This is what we do as human beings. We want to cut our losses. And so you have to understand that once you put a trade on, that program is going to kick in, and you just need to be aware of it, and you need to figure out a way to trip that habit of trying to intervene in the trade. Figure out what the cue is, what the routine is, and break the routine, break the cue, break the space between the cue and the routine. You know, put your trade on and turn off your monitors. Put your trade on, go out of the room, close the door until you hear a fill, then come back in. Whatever it takes, I don't know. But you cannot do it in the moment. You cannot control how you're going to execute in the moment. It's something you need to work on ahead of time. Okay?
Okay, let's see. Can you go back to the slide that you had the Amazon link for the book?
Sure.
There's someone looking for that.
We're going to get everybody dizzy here. There it is. Let me type it in there for everybody. I don't know which question that is, so it's case sensitive, so make sure you get the case right. Also, when we produce the video, it'll be in the description, so you'll be able to click on this as well as the chimp paradox. I'll put the link to it. You know, you guys can amend your description to put the link to it so that people can grab it. But it'll be on my website once I put the video up, as well as a resource that was shared in the webinar.
Okay. There's a question. He says, a few Mondays ago during your Trader Bite, you said something to the effect that your morning had been hectic and you weren't able to follow your normal routine. Did that affect your mindset and your trades throughout the day?
Yeah, so in the Stage 5 chat room, I every once in a while I'll that I'm not having a normal morning, and so what I do is just either not trade, or I'll just sit out the first of what we call the initial balance, or the first hour trading. I know, just experientially, I know that when I come in and I just don't feel settled because of whatever, you know, I had to drop off my kids and something happened and whatever, I know that I should not trade those days. And so I would rather save the money and fight later for my edge or another day than to come in and try to force the trades because I feel like I need to make money. It's better for me. I need to be in a very particular zone or state of mind to take trades. Let's just kind of simplify the answer that way.
Okay. Let's see. How do you get the confidence to know that you're making rational, discretionary trading decision versus being emotionally reactive to the market when you're trading? Plan itself.
Say that again?
It's long. Give me a second. Let's see. How do you get the confidence to know that you're making a rational, discretionary trading decision versus being emotionally reactive to the market when your trading plan itself requires you to make real-time subjective decisions rather than objective mechanical decisions?
Got it. Okay, so that in itself is probably an hour-long thing, but I'm going to summarize it to say, why am I making emotionally reactive decisions? I am not in the business of making emotionally reactive decisions. I'm in the business of recognizing when the market's in alignment with one of my hypotheses, and I'm in the business of finding structure to lean on. For example, this mid-long right here had structure to lean on right back here, I can see that as long as it does not breach below this point of control against the mid is this blue line right here, then I'm looking for the long, and I am wrong below 2093. That's all I need to know. It is almost mechanical. It's just that I'm doing it by hand. Even when I'm scalping, and remember, I'm originally a high-volume scalper. That's how I learned to trade. It's very mechanical. I saw this, I do this. I saw this, I do that. It's not taking off, I get out. There isn't this. That's the part that this webinar is about. It is that we are not seeking to make emotional decisions here at all. Your emotions do not have a place in this. Your emotions have to be recognized. You cannot ignore them. You can't shut them down. You're a human being. You just have to recognize that they don't have a place here. You have to say, oh, I'm getting irritated. All right, it's time for me to just take a deep breath, go walk away, fill my glass with water, close my eyes for a few seconds before I re-engage. You just have to be a good trader, in my opinion, you have to be really clear about who you are, and that's a really hard thing for people to do. You have to be clear about your responses, your reactions. You have to look at yourself as if you're some specimen, some alien specimen that you're studying. Oh, here it comes. Look, he's starting to react this way. I am constantly assessing myself just as I'm assessing the market. I know that sounds like a cliche, some trader cliche out of a book somewhere, but it is true. If I'm not sitting here being objective with the market, like, oh, come on, move, God, stop. It's time for me to take a break. I've said this before. I've lost $56,000 in 40 seconds in the DAX. $56,000 in 40 seconds. Because I decided the market wasn't moving, and so I put on a 45 lot or a 40 lot, I don't remember, and I just held on to it because it hasn't been moving all day, so where's it going to go? Well, it hasn't been moving all day because it's been consolidating, and I happened to sell the rally breakout out of the consolidation because that was an emotional decision. Okay, that was my biggest loss ever. It wasn't my biggest. It's not bigger than my biggest gain ever, but it's still a stupid trade, and it's just based purely in emotions, and they just don't have a place. Your emotions don't have a place in this. You have to be aware of them, but they can't be part of the decision process. That's very important to recognize. Anyway, let's move on.
Okay, how do you know you have an edge? Statistical expectancy assumes you execute the trades in timely and mechanical manner, which in practice is not the case. It is hindsight.
Why does it have to be timely and mechanical? It's just an edge. It's just an edge. It doesn't have to be anything. You could trade moon cycles, you know, as long as there's some sort of consistency to how you're applying it, as long as there's a routine that you're following in your process and your risk is balanced with your reward. It doesn't. You're talking about trading an auto trading strategy. We are not auto traders. I can still, and many people I know, still make really good money trading the markets, and they don't have to program. They're trading themselves. So it doesn't have to be. Your edge isn't a mechanical thing. I know a lot of conversation and books and seminars are about creating a mechanical edge, but you're still following a process, and the sum total of all of your decisions give you an edge. Now, is that edge going to be accurate throughout? No, it's going to fluctuate, but so will the edge on your trading system. It's constantly diminishing, it's constantly changing with market cycles. It's not possible to have an ABC equals 1, 2, 3 relationship in the markets because we are trading other people's emotions, and including ours, and they're constantly changing. So the fact that we're not executing exactly to the tick, exactly where we are, all the time, and then we're measuring it, that's trading. The last trade you took that was exactly the same setup is likely to have a completely different outcome. The exact same trade, because every single trade is unique. So if every single trade in the market is unique because it's happening at a unique moment in time with unique value, then how are you going to argue that it has to be exactly the same? It's not possible for it to be the same. The edge is you. You know, you just have to figure out what it is that makes sense to you. That's all.
Okay.
It's not easy. Simple.
Yeah. How do you deal with the routine and boredom in between trading your setups?
The routine and boredom. So I trade multiple markets, so there's always something that I'm looking for. Otherwise, I just, you know, to be honest with you, a lot of times I just meditate. I just sit and close my eyes in front of the screen and I just wait. There's, especially something like last night where it was just boring. I mean, other than the move that happened at 5 a.m. Eastern, it was a pretty boring session. I just sit and look around and I do research, and, you know, I know that I'm engaging the market in some areas, in which case I'm focusing, but other than that, I'm fairly, you know, I stick with, I don't go and start watching a movie, or I don't go and have conversation elsewhere. It's my time to trade, and that's the focus. But there is a lot of boredom in trading. If you're doing this properly, generally, it's unemotional, and that for some people it's just not. They're looking for stimulation, and stimulation is great, but go get it at Dave & Buster's or some arcade. Don't get it in the markets. Go get it in Vegas.
All right. Let's see. Can you comment on how a trader can discover both what markets they should trade and what time frame they should trade?
I will pass on answering that question respectfully, just because it is not, this isn't the venue for it. In other words, the discussion here is about mindset, and the question is more of a technique type of question.
Okay. Okay, I'm gonna leave it with this one last question because we're running long. What is your final thought on Brexit?
I think it's probably going to remain. You know, I miscalculated, given the crazy number of emails we got from various exchanges and clearing firms about how margins are going up because of expecting historical volatility and stuff. I've been up for so long now, like 30 hours or something, and nothing happened. But really, they don't have exit polls for this because they haven't had an election or this type of referendum in like 42 years, so they couldn't have exit polls to project. You have to have a baseline.
Yeah.
So I expected exit polls, and I expected that to take place all night, just like we do with our elections. But it turns out that the voting has ended 45 or 48 minutes ago, and that they're going to start counting. The votes, and then it's likely to continue. The volatility is likely to be now. The market just pushed all-time highs here, as I've been talking about in the Trader Bites for the last 3 days, and we're likely to see volatility kick in from the reopen in 10 minutes all the way through to the European Open at 2 a.m. Eastern. So I think the volatility will be there, but overall I think you're going to see the same outcome as Scotland's referendum to secede. Overall it's going to be, yes, we'll remain, but here are the concessions that we're going to get out of the Eurozone. That's what I expected, and that's why I've been saying all week, look for new all-time highs later in the week.
Yeah.
And I think we're here. I think we've already taken them out. So. And not to say that I'm always right, but it's just common sense. You know, it's very, very damaging for Britain. As much as politicians would love to get out, it's very damaging, and the upside of getting out is not as great as the downside that it has on the Eurozone, which is their main trading partner, and themselves. So I think it's working out just the way common sense would would predict it would, but you still have to deal with the volatility that comes with it.
Yeah, I agree. Sometimes it's better to dance with the devil you know than to swim in the uncertainty.
Yeah, that's human nature, right? Very cool.
I thank you for today's webinar. It was great and really good subject.
Awesome. Hopefully everybody got something out of it. Thanks for hosting this again, Terry, and I'll catch you at the next one.
Yep, sounds good. See you then.
Take care.
All right.